Get ready to pay a lot more to heat your home this winter. With much of the nation in the grips of another blast of Arctic weather, the price of natural gas spiked to a multi-year high today. Sharon Epperson has more on how and why the bills will add up.
With the extreme cold, this year's best performing commodity is bad news for consumers. More than half of U.S. households heat their home with natural gas. And as well below average temperatures are expected to last into February, prices for the heating fuel are skyrocketing. Natural gas futures traded at the NYMEX are at the highest price in 3.5 years, surging 20% in a week. And cash prices in the Northeast have hit new records.
The market was unprepared for this level of cold, and really we've seen big drops in inventories, which is really what's driving prices higher.
The recent price spike could trickle down to consumers who were already expected to see higher heating bills this winter. In a report released earlier this month, the U.S. Energy Information Administration predicted consumers would spend $665 on natural gas this winter. That's $62 or about 10% more than they spent to heat their homes last winter. Those in the Northeast are expected to pay significantly more, spending over $1,000 to heat their homes this winter, about $150 more, or a 17% increase from last year. But the severe cold is lingering longer than some forecasters had expected, so utilities that did not lock in prices before the winter and their customers could be in for an even greater shock.
As a consumer, you really don't have any protection or way to know just whether your particular utility is one that is well hedged or one that is going into the winter short, and therefore in a winter like this has to pay up to get gas in times of high peak demand.
Tradition Energy's Addison Armstrong says many consumers could be in for a rude awakening when they open their heating bills in March. For Nightly Business Report, I'm Sharon Epperson.